Hey guys, this is Toby Mathis, and a question we get a lot is how do I invest in dividend stocks? And I'll just tell you, in Infinity Investing, our focus really is on looking back into the past on a company's historic returns and making sure that it's consistently grown its dividends over a number of years. We tend to focus in on the 25 to 50 year period, but we go all the way to 10 years. So some of the newer companies that are really good, solid companies that have a historic preference for paying out its profits to its shareholders, which is what we like to see. We don't want to invest in something and hope that it goes up. What we want is to receive monies for our investments all the way along 10, 15, 20, 30 years, 50 years plus into the future. We want to know that that's what that company does, is they like to reward their shareholders by paying out their profits as opposed to taking them offshore and hiding them in some country where they can avoid tax on it. What I care about is what's in my pocket, not so much what's in the company's pocket. Sorry, but that's what we focus on. And that's when we invest in dividend stocks. We're looking and saying, how much return can we get? So what do you want to focus on? We want good, solid companies that have been consistently making money. Like, you can pay out a dividend and still be losing money. You just won't be able to do it very long, right? So we want companies that consistently make money and take out a predictable portion. Maybe it's 50%, 60% of the profit that it pays out in the form of a dividend, keep some of it for reinvestment and growth. And it's a nice combination. So you look at cash free flow and some of those things. You can learn all about it in the Infinity Investing basic area and the advanced areas. Both of those do address that. You could take a look and say, here's companies that have historically been paying out increasing dividends every year. The dividend goes up and consistently growing and not cutting its dividend whenever the times get tight. That's what we look at. So we want good, solid companies. If you see a high yield, and a high yield to me is anything over 6%, in other words, it's paying out more than 6%, something's going on where there's either been a pullback or for whatever reason that company is getting some flack where people are a little bit leery of it. And it might be either a great buy or that company has had something material go on where we're scratching our head on it and we're worried about its viability in the future. What's the best scenario is when you see a high dividend and there's nothing that occurred that caused that's happened. Maybe they're chasing after all the growth stocks and the company has just been left in the dust by the market because it's not exciting. It's just a continuous payout. So I look at like an AT&T, for example, and that just huge media company, high dividend yield, that's always going to keep its share price kind of where it's at, but it's not exciting. It's not Amazon, right? It's not a Tesla. It's not something where, oh, hey, it's not a Facebook. It's not just, exciting. But out of all those companies, there's only one that pays its shareholders and rewards them consistently every year after year for more than 25 years. An increasing dividend, and that would be the AT&T of the world. So I tend to look at dividend stocks and say, when is my appropriate time to buy? In other words, I could be looking at a company that's been paying out dividends, but the yield is only 2% right now because the value of the company's up. I probably am going to take a pass on that. If something's in the 3, 4, 5% range, I'm very interested. 6%, now I'm excited. 7, 8%, I'm going, I'm going to be looking at it a little bit skeptically, and I'm probably going to do a little bit deeper dive to say, why is that occurring? Because that's a really, really great return just for owning a company. And just to put it in perspective, I put $100 in a company, it's paying me $7 a year. It's not long before I get my entire investment back and everything's gravy. That's the perfect scenario. So that's what you want to do when investing in dividend stocks, is really focus in A, on that yield, and B, on the cash free flow. And then make sure that the company has not had material impacts that are causing that yield to be high. If I see a nice high yield in a company that's just a steady Eddie, I'm probably going to go for it.